Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring, and today is Saturday, January 21st, 2023, and thank you so much for coming and visiting me here for my weekend review. In this podcast today, this is going to be the format. First of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at all the current trades that I participated in last week, both on the daily time frame and on the weekly time frames. We're going to talk about when I entered the trade, why I entered the trade, and most importantly, how I'm going to manage the trade going forward. And hopefully that will be help for you in seeing how I take a look at trading, how I view my support levels, how I position size, where I place my end-of-day stops, where I place my emergency stops, where I place my profit targets above, where I'm looking for significant overhead resistance levels, RSI levels, things like that. And hopefully by watching this, it will help you with your trading as well. At least that's my goal in doing this each week. After that, we are going to talk a little bit about trader psychology, always the most important skill, the ability to create a plan and then follow through on the plan that you created without letting your emotions get amplified and get you off track and get you away from your process. So most important skill in trading, I mention this every single week, but I mention it because it is so true. And hopefully by talking a little bit about trader psychology will help you as well. After that, I always like to do a quick poem from my friend Frank, the trading poet. Always has great poems, always relevant to what's going on in the market at the moment. Hope you enjoy that. Then after that, I have gone down through my master watch list and looked through each particular symbol and looking for some potential trades next week if the price goes higher or lower. Usually the price either has to go lower, find some support, or it has to get over some kind of resistance level and then rely on some momentum. So I've gone through both the charts on the daily time frame and the weekly time frame. Have some shorts this week, some potential shorts this week if the price goes up and needs to go up a little bit more to get to a certain level. But both on the daily time frames and the weekly time frames, I'll take you through what I'm looking for my trades next week, and hopefully that will be helpful for you as well. So that's what we're going to do today, and let's get started. I'm going to run the U.S. legal disclaimer, and I will be back in about 40 seconds, so hang tight, please. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, thanks for holding through that with me. So listen, I'm going to go through all the trades that I participated in last week. I do my best to show you how I entered. I talk about the rules of, where I get out of half or where I get out of the entire position. Just want to mention that, if you're interested in this, if you're interested in studying with me one-on-one, I do offer a one-on-one course in the evening times via Skype. It's just one-on-one, just you and I teach you all 5 of the different trading approaches that I use. I teach you step by step all the rules that I use. It's a great course. I think it's, in order to really learn something, I think one-on-one with your teacher, your coach, and your instructor is the best way. I'll talk a little bit more about it at the end of the podcast. But in the meantime, if you are interested in this, I do have my email in the link of this YouTube video. Just send me an email if you want to get the process started. I know you will be happy that you did. I've taught students from all over the world, many of them, and I know they were all happy and they learned a really good skill. So if you're interested, just send me an email, which is in the link. So, okay, let's get started. MasterCard's been a really nice trade. I bought MasterCard back here on the 20th of December of last year. I bought it because we had a rejection and bounce at the confluence of the 250-day moving average and the 300-day moving average. So it rejected a major level of support, and that's really what I'm looking for. So when I enter a trade, just to go over this quickly, very, very important when you enter a trade that how many shares do you buy, right? Well, you have to buy, or you should buy, or at least I buy the amount of shares based upon what the volatility was at the time when I purchased it. So let me show you. It's really quite easy. First thing you have to decide, or you have to look and see, okay, what is my total capital? Let's just say hypothetically it's $100,000. I take 1% of that total capital. So 1% of $100,000 is $1,000. Okay, I take $1,000 and then I divide it by the value of the average true range, which here on my chart it shows me what it is, and this is just 2 standard deviations away from the entry point. It should not go down there, but if it does go down there, something's really wrong and you want to go out. So I take 1% of my total capital. If it's $100,000, it's $1,000. If it's $50,000, it's $500, and I divide it by the value of the 2 ATR. Right here it's 1471. So divided by 1471 tells me to buy 67.9 shares. Well, I can't buy a fraction of a share, so I just round it up to $68 or 68 shares. So if I buy 68 shares here and it goes down the value of 2 ATRs, then I lose my $1,000. So I take my maximum allowed loss, which is $1,000 in this case. That's where I buy. Then I place my emergency stop to exactly 14.71 points below my entry point. So if it does go down there, then I will lose the $1,000, and I need to be okay. In the worst case scenario, that's what I'm going to lose. Okay, it could gap through that. So technically, yes, it could be a little more than that, but 2 ATRs away from your entry, pretty far down there, and only about 5% of the time that will happen. So that's my emergency stop. Now, I always make my decisions to enter a trade or exit a trade at the end of the day. But with your emergency stop, this is one situation where you do not wait for the end of the day. If I would have bought it here and the next day it would have just got there, I don't care if it's 1 minute after the market opens or 1 minute before the market closes, I'm going to get out immediately, because that is the dollar amount that I said, okay, if I'm wrong, that's where I'm going to get out. So that is my emergency stop, and that is position sizing based upon volatility, how much things are moving up or down, and that's all reflected in the 2 ATR. Now, so my emergency stop was down here at 327.60. My end of day stop, which 95% of the time would just be a close below the reason I took the trade. And the reason I took the trade was because it bounced and held support at the 250 and 300. Had it closed below these moving averages by the end of the day, I would have just gotten out, and hopefully for a small loss, but it did not do that. It went below, but then closed above, so I kept it. Then it went below and then closed above, and I kept it. All right. Now, as things move up, I always take partial profits. If it moves the value of 0.45 ATRs, in this case right here now is 331, if it moves $3.31 from the previous day's close, I will take off 10% of that position. If it moves another 0.45 ATRs above that, then I'll take off a second position. And if it moves 0.45 ATRs above that, I'll take off a third position of 10%. So I like to scale out as the market is going my way. I like not take the whole position, but just a partial 10% position. So here I hit a profit target of 10%. Here I hit 3 profits of 10%. Here I hit another 10%. So I like to scale out as it's moving up. So the emergency stops, the end of day stops, that is all defensive. But taking profits, partial profits as it moves up, that is offensive. And I like to play offense and defense. Now, orange line here, this is my trailing stop level. Once I get to trailing stop level, now things have changed. And then if I get a close below a previous bar's low, then I will take half of my position off. So Entered here with the bounce and rejection of the 200 and the 300, got to trailing stop level. Doesn't mean I do anything. I'm just waiting for a close below a previous bar's low. But in this situation, it just went up and up and up and up and up. And then here, I got out of half of the position because we went over 70 RSI and then closed underneath it. That is my signal, one of my rules to get out of half of the position. So on that half, had a profit of about 8.67% that I locked in, again, because we went over 70 and under 70, about 88% of the time, 80, 90% of the time. When you get to a 70 RSI level, that's about it. That's about it. That's why if it goes above 70 and then closes below 70, I sell half, or even if in the same day it went above 70 and closed below 70, I would also get out of half. So that's why I got out of half of the position. That was, I guess, Monday. And then on Wednesday, I got out of the other second half of the position because we closed below the here we go. We closed below the 5 EMA after reaching the 65 RSI. If I ever get to a 65 RSI level and then it closes below the 5 EMA, then I am just out of the entire position. But again, these are all the rules that I talk about in my class. I try to go over them here, but in the one-on-one course that I teach, we go over these ad nauseum. But again, on Wednesday, with the move down, it closed below the 5 EMA. This is your closest following short-term moving average here, and it's a good way to keep your profits because you don't want to let it come all the way back down here, but only at a certain point. Only when it reaches trailing stop level or reaches 65 RSI does that rule go into effect. So on Wednesday, it did close below the 5 EMA, and I locked in a profit on the second half at 7.2%. So pretty nice. And then it went up on Friday, of course. What can you do, right? Those are my rules. I follow them, and I had to get out. But sure, if I would have kept this, and I would have been happier that I kept it. But again, I had to follow my rules, and my rules told me to get out. But still, really nice second half of that trade, up 7.2%. All right, let's go to ARK. ARK. Great trade on ARK. I bought this back here on the 6th of January. Higher low V1. One of my favorite strategies. You have to close below the -1 ATR channel. This is the green line. You have to pop yourself into it. Then you have to have a little bit of a pullback and then a V1 reversal. And V1s consist of two bars. Here is bar 1. Here is bar 2. Bar 2 went below bar 1's low and then closed above bar 1's close. Of course, I position size. I place my emergency stop 2 ATRs below. Now, on this particular strategy, my end of day stop, there's no moving average here to key off of as the end of day stop, but my end of day stop on this one is simply a close below halfway of this washout bar where it triggered me into the trade. If it had closed below there, I would just have gotten out for a small loss, but it worked out well. And it did not get down there, and I did not have to get out of the trade, and it moved up beautifully. And again, as it moves up, I took some partial profits here, took some partial profits here, took some partial profits here. So I'm scaling out into strength. And then at this point, when we were way up here, we were way above the 65 RSI level. And remember the rule I just told you, if you're above 65 RSI and then you close below the 5 EMA, that's my signal to get out of all of the trade. And this particular trade, entry to exit there, 10.12%. So just a perfect example of a higher low V1, taking profits as we go, getting to a certain RSI level, and then closing below the 5 EMA. That's my signal to get out for a profit of 10.12%. Tesla. All right. Tesla, same setup as the last one. What was the last one? Oh, yeah, ARK. Higher low V1. We were below the -1 ATR channel. We popped ourselves into the value zone. We came back down, created the V1. Here's bar 1. Here's bar 2. Bar 2 goes under the low of bar 1, closes above the close of bar 1. That was my entry signal at 123.37. My stop on a V1 or a V2 is it closed below halfway of the washout bar. The next day, it opened way below. But remember, I wait for the close close back above it. That halfway from a Fibonacci standpoint is an important level, and many times after you take the trade, it will go below to test and then it closed above. So I bought this here at 123.37. Next day had a big nice move up. I took 20% of the profits off because it moved 2.45 ATRs. Next day, gapped open, hit another profit target. You can see the orange line is my trailing stop level. Have not quite got to trailing stop level. Once I do, then if I get a close below a previous bar's low, then I will get out of half as a precautionary measure, but has not reached that, so that does not go into effect yet. Friday, of course, had a nice big day up there, hit some more profit targets there. Took some off, and currently this particular trade from entry to exit up 7.53%. So really nice trade there too. Apple. Okay, again, these are on the daily bars. I did buy Apple all the way back here on the 29th of December. Why did I buy it? Entry signal was a close under the 30 RSI, close over the 30 RSI. Position size, place my emergency stop level. My end of day stop is just simply a close below the 30 RSI because I took it because it closed under 30 RSI, closed over 30 RSI. My end of day stop is simply a close under the 30 RSI again, or the emergency stop. Next day went sideways. Next day had a big down bar. Not happy about that, but it did hold the 30 RSI, so I held. Next day moved up, took a little bit of profits, took a little bit of profits, took a little profits, took a little profits. So I'm starting to, this trade has really started to take off. And on this particular day, we went over 50 RSI and then closed below. So I took half here at 133.40 for a approximate 2.95% gain on half, and I still have the second half, and we are moving up nicely. Now, an under 30 over 30, I have 3 rules to exit, and one of them has already happened. We went over 50, under 50 RSI, so I took half. If on Monday we reject this 50 RSI, 50 SMA, I would get out of the second half. I have got to trailing stop level here. So once I get to trailing stop level, if I have a close below a previous bar's low, I would also get out of the second half. So I have 3 rules to get out of half. And if 2 of them happen, 2 of 3 happen, then I am completely out of the trade. So this particular trade on the second half from entry to current price is up 6.13%. So I use 5 different trading approaches. I use a deep dip buy approach, which is a 250, 300, 300, or 200 SMA, keying off those. Also an under 30, over 30. Those all fit into the deep dip buy category. Higher low V1s, V2s, like I showed you on Tesla and ARK. That's another one. Return to value V1s, V2s is another strategy that I use. Moving average crossovers, another strategy I use. And the last one I use is a double bottom bullish divergence, which is a great strategy that I learned from studying one-on-one with Dr. Alexander Elder. So any of the trades you see me place here or manage in here are going to be one of those 5. And again, those are what I teach step by step in the one-on-one course. So that's Apple. SPY. SPY is a new trade that I took on Friday. It is a short trade. Here, the black line, that's the 200 SMA. Now, getting over the 200 SMA, you'll have the support of the 200 SMA underneath you, but now it is resistance above me. So I did short, and the reason I short is because it touched the 200 SMA, couldn't get above it, showing that there was some resistance there. It doesn't mean it can't go above it, but I think it's less likely to go above it for 2 reasons. 1, it couldn't do it on Friday. And 2, you see the big down bar here? Whenever you have a big down bar and you rally back up into the halfway of that big down bar, just like I was telling you on the V1s, V2s, there is resistance there as well. So I see resistance at the 200, and I see resistance at we're halfway of this big down bar that happened over here on the 18th. So this gives me a very good risk to reward ratio. So I went short here, 395.70. I place my emergency stop, in this case, 2 ATRs above. And my end of day stop is simply if it closes even a penny above the 200. Just simply a penny above the 200, I would get out. Alternatively, if it goes my way, of course, I'm going to take partial profits if it moves back down. Here's my trailing stop level. If we get to the trailing stop level, then if I have a close above a previous bar's high, then I will get out of half. Just opposite of what I do with the long position. So I do like this position very much, again, because the big down bar, we're right at about halfway of this big down bar. We've rallied halfway back up in there, and we have some significant resistance here of the 200. So, and I have a lot of long positions. So throwing a little short position in here, I do not have a problem with that at all, because this is a great risk to reward ratio, and it will hedge a little bit against my other positions. So I hope that makes sense. And I entered this at 395.70. It's 395.71, so I'm out of the money. 1 penny on the trade, and I guess I'll survive that. Okay, let's get over to some weekly trades. Now, weekly trades, love weekly trades, really do. Weekly bars close on Friday. So what I do is I go through my watch list, look during the week of what looks good, look on Friday. If it is rejected a level below or rejected a level above, then I place my weekly trades at the end of the day, right near the close on Friday, and then anything I have to do the following week, I wait until Friday to make that decision. I like trading multiple time frames. I think it helps to smooth out your equity curve. You don't have everything just based on the dailies or the weeklies. You have a combination. So here we go. Let's get to the weekly bars. I did buy Google on the weekly on a Friday on the 23rd of December when we rejected the 250 week moving average. Then I have to wait for the next week to see, okay, did it close below why I bought it? Well, it bounced at the 250. My end of week stop would have been a close below the 250. It did not get there. So I saw the trade, rejected the 250, position size correctly, entered the trade. My end of day or end of week stop is a close below the 250. Of course, I always have my emergency stop below. And how far below is that going to be for my entry? Exactly the value of 2 ATRs. Right? And so the next week we went under, but closed back over, so I kept it. The week after that, we went under, closed back over, so I kept it. Next week, finally had a move up, took some profit targets, partial profit targets. This week, big week up, took some more partial profits. Here is my trailing stop level, right here at about $100. Once it gets to that, then I will go into trailing stop mode, but it has not got there. So far this trade has worked out really well. From entry to current price up 9.3%. So pretty nice. SSO. SSO is basically double leverage SPY. So I bought this back here on the 6th of January. Why did I buy it? Well, we had to close under the 200 and we had to close above the 200. And see how good my risk to reward ratio was? If the next week it closed just barely below it, I would have just gotten out for a small loss. Of course, you can see my emergency stop all the way down here. And then my end of day stop, what was it again? That's right, just a weekly close below the 200. Well, next week it went up, took some profits. Last week went down, tested it again. See how it's tested it twice? Tested it here, went back up, tested here, went back up. So that level of support really is holding. And this particular trade from entry to current price up 3.84%. Orange line up here, of course, is my trailing stop level. Have not got to that yet, but once I do, then I get into trailing stop mode. IWM. Boy, I feel like IWM and I have been married for a long time. So here's IWM all the way back here on October 14th is where I bought IWM. Rejection of the 300 weekly SMA, position size, place my emergency stop. My end of week stop would simply be a close below the 300. Has not happened, moved up, took some profits, moved up again, took some profits, got to trailing stop level here. Doesn't mean I do anything, just waiting for a close below a previous bar's low, which happened here back on the 9th of December, got out of half, and locked in approximately here 6.4% on that particular half. Then we move back down, We got close to the 300 SMA, but never closed below it. Then we had to swing back up, took some more profits. So this particular trade on the second half of IWM up 9.72%. Now, it's a 52.79 RSI. I discussed this a little earlier in the podcast, but if it keeps moving up, I'll continue to take partial profits. If we get to a 65 RSI level, then the 5 EMA will come into play. And then once I reach 65, and if it ever closes below the 5 EMA, then I will be completely out of the trade. Alternatively, if we go up and reject the 70 RSI, I will get out of half of the shares that I have remaining. And then in the future, after the rejection of the 70 RSI, if I have a close below a previous bar's low, then I will get out of the entire trade. But been in this trade for a minute, for sure, for a couple of months or more. Almost 3 months. But the second half of this up 9.72%. So very happy with that trade. Microsoft, another weekly trade. Took this all the way back here on the 4th of November. What was my entry signal? Just this bounce off the 200-week moving average. Bought here at 221.34. Position size quickly, placed my emergency stop. My end-of-day stop or end-of-week stop in this case would have been a close below the 200. Never got there. Next week, moved up strongly. Took partial profits. Also got to trailing stop level. Then had a couple weeks of sideways, moved up here, took some more profits off. Took 2 profit targets off here before the big reversal. Then this was the first close below the previous bar's low after reaching trailing stop level. Got out of half here at 239.50 for approximately a 7.18% profit that I locked in. Then we moved back down, respected the 200 again, and then moved up. So the second half of this trade right now, entry to exit is about 7.95%. And then last but not least, KMX is another weekly trade that I took on yesterday. And let's take a look. Let's see what the strategy was. Well, this is a higher low V1. We closed below the -1 ATR channel, the green line. We rallied into the value zone. Then we pulled back and had this V1. Bar 1, bar 2. Bar 2 goes below the low of bar 1 and closed above the high of bar 1's close. That's my entry. I position size, as I mentioned. I take my maximum allowed loss divided by the value of the 2 ATR, place the emergency stop down here. But on a V1 or a V2 entry, your end-of-day stop is simply going to be a close below the washout bar or the second bar in the V1 or the V2. Well, here's the high, here's the low. Right about here is my halfway point. Now, this is very important because, look, if I have a good trade and moves up, great. But my risk is essentially just from here to here. Next Friday, if it closed just barely 1 penny below that halfway, I would just get out. And that's the key in trading. Having small losses when you're wrong, because you're going to be wrong a lot. I'm wrong a lot. But when I'm wrong, most of the time I'm wrong pretty small. And when I'm right, I have the potential for a big trade, as I've shown you through these trades. So look how close we are, right? I mean, I got in at 65.40. My stop is at 65. So with a theoretical 41-cent loss, that's it, with potential for a big upside. So hope that makes sense. And by the way, I do have a video on my YouTube channel. It's in the lessons playlist about V1s, V2s. And it's, I think, about a 50 minute video. And I show you some of the rules of V1s, V2s. They're one of my favorite entry triggers and kind of the bread and butter in my trading. Doesn't matter what strategy you use. If you have a V1 or a V2, it always enhances the chances of having a profitable trade. So if you'd like to learn more about it, just go to my YouTube channel in the playlist section and look for the V1, V2 lesson. It's totally free and hopefully it will help you out. And then, of course, in my one-on-one course, of course, we cover V1s, V2s for many, many, many hours. So those are the particular trades I have at the moment. It was a great week last week. Most of these trades, I think all of these trades, except for the SPY trade that I took on Friday, are in the money. Very grateful for that. And So we'll see what next week brings. All righty, let's get on to trader psychology and to one of Frank's trading poems. First, let's start with trading psychology. This is from my good friend Thomas Payne. You can follow him on Twitter at TraderTPayne. Really like Thomas. Mentioned this before, but Thomas used to be a scientist, and then he switched professions and became a professional trader, and he brought his scientific method from his previous occupation into trading, and that's what I really appreciate about Thomas. He really does bring the science to the trading. Let's see what Thomas has to say. Trading stocks is like fishing. You never know when you are going to catch the next big one. All you can do is put yourself in the most favorable position and keep casting your bait. I like fishing analogies, right? This is very true. Trading is like fishing. You don't know when you're going to catch a next big trade. A lot of times you're going to place the trade on, it's not going to do much, or you're going to get a small loss, but that's okay because eventually you will catch the next big one, or in trading terms, you'll catch a big move up, just like the trades that I just showed you. All of those trades have done very, very well, big gains. I didn't know, right? I didn't know. All I could do was put myself in the most favorable position. And how did I do that? Well, I look for support. I look for levels like the 200, the 30 RSI, the 250, higher low V1s, V2s. I place my end of day stop very closely to that. But there was some thinking involved, right? I looked for a level below that was rejected and had support. I threw my line in the water and didn't mean that I had to catch a big one or that it was going to work. But if it was wrong, hopefully I set everything up so that I would, have a small loss, or in the worst case scenario, an emergency stop loss, which is still a small loss in the context of my trading account balance. And then I threw my line in and saw what and just waited for something to happen. Well, in this particular case, it happened, and I did keep the big one. So all you can do is put yourself in the most favorable position and keep casting your bait. Look for those support levels, position size correctly, place your emergency stop, know where your end of day stops are, and rinse and repeat. You're going to lose a lot of them, but hopefully, and if you set it up correctly, the losses will be small. And if you're right, every once in a while, you're going to catch that big fish. And those big trades, like the ones I just showed you, those are going to pay for many, many little small trades where nothing happens, or if you have a small loss, and then some. And that's the profitable math behind trading. So trading stocks is like fishing. You never know when you're going to catch the next big one. All you can do is put yourself in the most favorable position and keep casting your bait. Please follow Thomas at Trader T Payne over on Twitter. Thank you very much, Thomas. Great, great post. Okay, here we go. Here's my good friend Frank. You can follow Frank at FrankOD, and he posts great trading poems every week. Every day. Let's take a look and see what he wrote here. Don't make trading any harder than it has to be. A process adds a level of simplicity. Trading has risk and no one has invincibility. That's why management is the key to profitability. Geez, isn't that a great poem? Don't make trading any harder than it has to be. Don't. It's simple. Look for support levels, position size correctly, know where your end of day stop is, know where your emergency stop is. That's it. And then here are the rules. A process adds a level of simplicity. If you don't have a process, you don't have anything. You're just gunslinging at that point. If you don't have rules, you don't have anything. You have to have rules. And there's a lot of different rules out there, but you have to have a structure for your trade. Trading has risk and no one has invincibility. That sure is true. That's why management is the key to profitability. So true, Frank. Thank you so much. And, in my one-on-one courses, this is what I teach you. All of this. I teach you how to manage. I teach you a process. I teach you all sorts of different things. And that's why I think that my one-on-one course is so, so valuable. So hope you keep that in mind. So thank you, Thomas. Thank you, Frank. And let's get back over to potential trades for this coming week. Let's start with the dailies. And as I mentioned, I do have some short positions here that I am looking at. Not a lot to the upside. There are some, but since we've had this big rally, a lot of those key low levels are gone. So look for some levels to the upside to short. Okay, here is Carnival Cruise Lines. You can see Carnival has had a huge rally from 7 up to 10. Well, what do you think I'm looking for on this one? This is a short. I'll give you a hint. This is a short position. See the black 200 SMA downward sloping? This is going to be the market should have some issues with this 200. But you remember at the beginning of the podcast I told you if you have a big down bar, then about halfway, if you rally back up into about halfway of that big bar, there's added resistance there. So what I like here is that we've had the big down bar. We are attempting to rally back up into it. That halfway of the big down bar dovetails almost exactly with that 200 week or 200 day moving average. So next week, if we do go up, if we touch the 200 and then close back below, I will short. My end of day stop will just be simply a close above the 200. Alternatively, if we close above the 200 and then close back below the 200, I will also get short using the 200 as my end of day stop. But this really jumped out at me. The big down bar on large volume, there was some distribution here. Some buyers did come in to buy that initial dip, and that is what's making us bounce. But if we reject the 200 and it gives me a good risk to reward ratio, I will get short, place my emergency stop 2 ATRs below. My end of day stop would just simply be a close above the 200 day moving average. If it starts to move down, then I will take partial profits on the way down. If it gets to 1.5 ATR trailing stop level, then if I have a close above the high of a previous bar's high, I will lock in half, just exactly the same as I do on my long trades. But I really do like this trade a lot, but only if it closes above and then closes below the 200 or rejects the 200. But I like this trade a lot. All right. DDM, which is the double leverage Dow. Now, this one, there's no trade here. The only trade I would be looking for next week, if it happens, doesn't mean it has to happen. And if it doesn't happen, I won't do anything. But do you see the 200-day moving average here? Do you see how the market, once it's got down there, has respected it, bounced, closed, touched it, bounced, touched it, bounced, touched it, bounced? Well, that's showing that the market is respecting the 200 level. So next week, if we go down, reject the 200 again, and it gives me a good risk to reward ratio, I will get long DDM. But who knows if it's going to. Just want to point out here, see the big down bar? Well, halfway of that bar is going to be some significant resistance. So if we do head up again next week, I would imagine that once it gets to this halfway level, that it will find some resistance there. I'm not going to short that there, but just wanted to point this out. Hopefully it's helpful on these big down bars. And if we rally back into them, there'll be some inherent resistance there. But what I'm looking for is not that. I'm looking for a move back down and rejection of the 200 with a good risk to reward ratio. IWM. Okay, so this one, now I am already in this trade to the long side, but do you see the 250-day moving average here? We did not reject it, but I'm not going to take this trade because I am in IWM to the long side. But I just wanted to point this out as a good teaching opportunity that if we did reject the 250, that would be a decent short position. And again, see the big down bar that we had? Right? If we rally into halfway of that bar, that's going to be resistance. And then if we fail and close back below the 250, that would be a good short position. But again, I'm just saying this as an example, as a teaching example when I was looking at this chart, but I am already in the trade to the long side, but this would be a decent short opportunity if I was not already in the trade at the long time. Coca-Cola. Well, I've been mentioning over the last couple weeks that these consumer defensive stocks like Coca-Cola and Philip Morris and Budweiser, a lot of people were putting money into these type of stocks because of the safety and the dividend. Well, look, we have had a huge move down in these safety stocks. And that's why you're seeing the growth stocks like Apple and Google and Microsoft and Tesla move up, because the money, for whatever reason now, people have decided, I think maybe the worst is over. So they're getting out of these defensive stocks and rotating money into the growth stocks. But there is an opportunity here for us, because this is a big move down. And this was actually a legitimate trade on Friday, because here's the 300 SMA. We closed under, closed back over. Gives us a good risk to reward ratio here. I didn't take the trade. I took some other trades, as you know. This big down bar here is concerning. See the big down bar here? See the next day, it got right to about halfway of that bar, and that was it, and boom, right back down. Doesn't surprise me. I don't like this big bar here. So what I'm looking for on Coca-Cola next week, I don't really care about the 300 at this point because of this big down bar, but we're at a 36.18 RSI. If we went under 30 over 30, right, that's one of the approaches that I use. If we went under 30 over 30, that would be my entry signal, and that's what I'm looking for next week, is a close under 30 over 30, or some kind of rejection, intraday rejection of the 30 RSI. So that's what I'm looking for on Coca-Cola. Lockheed Martin. Good little example here. I would have taken this trade on Friday, but we have earnings coming up on the 24th. So what is that? Is that Monday? That's Tuesday. So I didn't take this trade because really all I'd be able to do is get into this trade for one day, because earnings, I don't mess around with earnings. I don't hold through earnings. But the reason I put this up here, this is a great example of a confluence of signals. Here's the 200-day moving average. We bounced. We got right there almost to the penny and bounced. And look at the RSI, 30.01. It was clearly lower on Friday and then closed back above. So this is a confluence of signals, and those are really the best signals to take, is when you have multiple signals. And this is multiple signal. One, it bounced at the 200. That alone by itself is good, but we also went under 30 over 30, and cherry on top, we created a V1. Here's bar 1. Bar 2 went under the low of bar 1, closed above the close of bar 1's close. So, and we closed over the negative third ATR channel. So 4 signals here. Really, really good. Let's look over on the weekly. Any support on the weekly? I like to look at the higher time frames and look for support. No, not really. We're in the value zone. I would have liked it better if we got to the 50 SMA as well to show support on the weekly. But we have earnings coming up. Once earnings are out of the way, if we have an under 30, over 30, or possibly an under negative 250 or over the negative 250, or if it heads down into earnings and then closes above the 200, that's when I would take it. But only if I got a valid signal, an under 30, over 30, rejection of the 250 or the rejection of the 200 after earnings, then, and it gave me a good risk to reward ratio, that's when I would be interested on LMT. Pfizer, well, another group where a lot of money has come out of, obviously. Look, we were at $55, now we're at $45. We've had a big down move, but whenever we have big down moves, I get interested because I'm looking for some kind of signal. Well, look, we're at a 28.76 RSI now. If we were to close back above the 30, then I would be interested in getting long Pfizer. Now, I talked about multiple time frames. Let's look here. I'm looking, if I'm trading the daily and I look at the weekly, are there any support levels here? There are. Look, the negative 1 ATR channel is going to act as some kind of support. So I like to look at the higher time frames to look for levels on support in the higher time frames and the shorter time frames. But on the weekly, we've rejected the negative 1 ATR channel. I like that a lot. And then on the daily, I'm just waiting for the tactical signal. The tactical signal would just be a close under 30, which 27.76 is under 30, and then a close back over 30. So this one, very close to triggering. If we do close back over 30 RSI sometime next week, I'll most likely get long Pfizer. RBLX, okay, another short position. Here are 2 abandoned babies. And you're like, what are abandoned babies? Abandoned babies are when you have 1 bar or 2 bars and you have a gap to the left, clearly a gap to the left here, and you have a gap to the right. See how they're kind of floating out here in space by themselves? This is a very bearish situation. It's a very bearish setup, but you still need some type of entry signal. Well, you guys want to take a guess at what that would be? Well, it's a rejection of the 200. If we head back up here, reject the 200, we go above it and then close back below it, I will get short RBLX. Alternatively, if we close above the 200 and then close back below the 200, I will get short as well. But here are the abandoned babies. On its own, it's not enough to take the trade, but it sets a context, big picture, that something is going on with this particular stock to have a big gap to the left, and then everybody changed their mind to have a big gap to the right, hence the abandoned babies. So if you have an abandoned baby, or it's also called an island reversal bar, that should pique your interest, as this is more than likely to go back down, but you still need to key your trade off of something, and I would key with the rejection of the 200 SMA. UUP, US dollar. Well, dollar, of course, has fallen off a cliff, and but we are getting to some important levels right now. Let's take a look at the weekly. Yep, the weekly is at the negative third ATR channel. 92% of prices tend to stop going down. So on the weekly, we're at that level already. Now, from a technical standpoint, we need an entry on the daily. Well, where's the entry? Well, here's the 300 SMA. If we close back above the 300 SMA, that would be a legitimate entry point to format your trade from. Or alternatively, if we go down lower, we're to 34, 33 RSI. If we went under 30, over 30, that would also get me long UUP. But again, I'm looking at the weekly, and we are at some support at the weekly of the negative third ATR channel, which is a very good place to be, just waiting for an actual signal. Close back above the 300, or if we go lower, rejection of the 30 RSI. VIXY. Well, VIX is certainly very, 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 very low. Historically, we're at a 30.96 RSI. If next week we go under 30 and then close back over 30, I will get long VIX, and will give us a higher low under 30 over 30. Here we went under 30 over 30 from a lower low situation, and as many times lower low situations lead to a pullback again. But a higher low, whether it's a higher low V1, V2, higher low close back above a major moving average, or a higher low under 30 over 30, higher lows are always better. So if VIX has an under 30, over 30, I will definitely get long next week. And again, these higher low situations, I teach these all in my class ad nauseum, step by step, but higher low triggers are always better than lower lows. Higher low tend to have nice long up moves, where lower lows tend to just bounce like this did, down and then bounce and then fail. So under 30, over 30 on VIX is what I'm looking for next week. Verizon, well, haven't had a lot of return to value V1s, V2s. Return to value is when you are in an uptrend, or in other words, you're above the 1 ATR channel, and then you pull back into the value zone. Well, here's the value zone. This green line to this green line. Anywhere in here, this is the value zone. Well, we had a big move up. It's just natural to have a little bit of pullback, reversion to the mean, which it has. Once it returns to the value zone, I need 2 days of sideways motion. Well, that's in place. We went down. This is sideways to that. This bar is sideways to that. 2 days of sideways motion. Now, if I get a V1 or a V2, that will trigger me into the trade. And again, this is another one that I teach in my course. Return to value V1s, V2s, one of my very, very favorite trades. Haven't had a lot of these potentials, but when I saw Verizon here, I was like, oh my, that is a really good potential setup, but I just need a V1. For example, on Monday, if we went under Friday's low and then closed above the high, then that would get me long Verizon. So I'm looking for a V1 or a V2 this coming week to get me long on Verizon. Walmart is our last one on the daily. Well, Walmart has really, really, really moved down. Look at this. Again, it was a safety play. Everyone wanted it. Everyone wanted it. And oh, now no one wants it. No one wants it. But we are coming into some major support here. Look, here's the 300. Here's the 250. Here's the 200. Here's the negative third ATR channel. So anywhere in this location next week looks like a good buy area to give a good risk to reward ratio. So next week, I don't care what it does. If it rejects the 300, I'll get long. If it rejects the 250, I'll get long. If it rejects the 200, I'll get long. And the other thing I want to mention here, and again, this is something I teach in the course as well, but double bottoms, bullish divergences. This is a perfect example. Look at these lows. Look how deep these red MACD bars are. That shows a lot of selling strength. That's step one. Look for a low with deep red MACD bars. Look for a rally where you get some green MACD bars, which happen. And then you have to come back down, go at least as low as the previous low or lower. But now do you see the red bars down here? See how these bars are not as deep as these red bars over here? That's a double bottom with a bullish divergence. It's showing that this move back down here, although it looks quite strong, was not as strong from a MACD perspective as over here. The implication is you're running out of sellers, and the implication is if you're running out of sellers, then it's going to move back up. But you still need to key your trade off of some kind of level. And my level for next week would either be the 300, the 250, or the 200. So those are the dailies for next week. Let's take a look at some weeklies. All right. I've been talking about this trade for a while. Just has never got there, but it's good to be patient. This is AGQ. This is silver. I'm looking for a rally up to that 200-week moving average, some kind of rejection. If I get a rejection there, that's my short position. Now let's look at the higher time frame, the monthly. Well, the monthly at that same level where the 200 was, see the 50, see the 100. These are, and the 50 EMA, these are some significant resistance levels on the higher time frame. And then if I go to the tactical smaller time frame of what I'm looking for, then I find my actual level that I'll key off of. But just to make it simple, the monthly, from a technical standpoint, a lot of resistance here, and that dovetails nicely with the 200-week. So if we go up, reject this 200-week moving average, it will get me short silver. Place my emergency stop above. My end of week stop would just simply be a close above the 200. So I've been talking about this for weeks. It's just never got there. But if it does get there, I will definitely get short AGQ on the week. JO, well, this is setting up pretty nicely here. We have the 250-week moving average. We have the 200-week moving average. You see how the 200-week is 44.36 and we closed at 44.27. I would have gotten long this on Friday if it had closed above, but it didn't. So it's still resistance above. If it closes above the 200 next week, not up here, then the risk to reward ratio is not good. It's chasey. But if it has a nice gentle close above the 200 giving me a good risk to reward ratio, then I will get long JO coffee. CarMax, oh, I don't know why I have this on here because I already took that. Again, I took this on Friday with a higher low V1 in the value zone. So let's disregard that one. And then last, XLRE. Okay, this is a bit of an interesting potential setup here. You see the big down bar here. Do you see how we've rallied, but we have not yet been able to get above that rally? And then we also have a structure break. Here's a low. We have a structure break to the downside. This is ICT teachings, which I really like, and it left this gap here. Here we go up. Here we change structure by taking out this low. A check back into this gap here is significant for me, but it moved back above this gap. So essentially what I'm looking for, but the context is we've changed structure, right? We have not been able to get above this big down bar, which was a big distribution bar. So what I'm looking for next week is a V2 to the downside. And so V1s, V2s, I've always talked about those to the upside. Well, here is a potential V2 to the downside. Here's bar 1. Bar 2 goes above bar 1's high. If we get a close below bar 1's close at 89.80, well, I better make sure. Close 89.95, sorry. 89.95. then it will trigger a V2. So next week, if we close below bar 1, this bar here on the 13th at the close, if we close below this, it will be a V2 to the downside in the context of structure break to the downside. So essentially that's what I'm looking for. Next week on energy, if we close below 89.95, that will give a V2 to the downside and I will get short. So I hope this was helpful for you today, going over the dailies and the weeklies and the trades that I have. And, as I mentioned several times during the podcast, I do teach a private one-on-one course. It's a total of 15 hours. It's one-on-one, just you and I in the evening time via Skype. There's 5 sessions. Each session is 3 hours long. So it's a lot of hours. It's 15 hours of one-on-one instruction. I teach you all 5 of the different trading approaches I use. I teach you step by step. It's very important to me that my students succeed. That's why I started teaching. And that's why I started this YouTube channel. I know if you take the course, you're going to love it. It does cost $1,750, but it is worth every penny. I promise you, and you're going to learn a lot and you're going to learn a skill. So if you're interested, my email is in the link of this YouTube video. Just send me an email. I'll reach back out once I receive it and say, hey, thank you so much for saying hello. Let's set up a Skype call, get to know each other. The Skype call is free. It is not a sales call. I promise you. I just want to learn more about you, your trading, your challenges, your goals. And then it's a really good time for you to ask me any questions about the course when we're talking. And then when we're done with the call, then it's totally up to you. I won't contact you or bug you, I promise. But if you like what happens in the call and you feel confident about it, then you just need to reach back out to me. We'll get it scheduled, away we go, and you will learn a ton. Now, if you like online courses, I do have a great online course. It's called the Deep Dip Buy Stock Trading Strategy. A lot of what we discussed today were deep dip buys, the under 30, over 30s, under 200s, over 200s, that kind of thing. And that's at udemy.com. The link to that course is in the description of this video. It only costs $12 or $15, depending on the day, on Udemy, and it is filled with content. 9.5 hours of video, 26 videos total, 15 study guides, and that is a very affordable, easy way to learn the deep dip buy approach. It's not as good as the one-on-one, obviously, but for the money and what you get, it's a fantastic bargain. So if you're interested in that, have some time this weekend, watch that course. I know you'd be glad you did. If you like today's podcast, I would appreciate it if you could hit the thumbs up button. It does help to build the channel. It helps YouTube know that there's some valuable content here that's helping people so that they can get it out more. So if you if you found something valuable today or in any past podcast, I really would appreciate if you wouldn't mind hitting that thumbs up button for you to check out. And then, as always, most important of anything, please go out and try to do something nice for another human being today. It's good karma. It would make the world a better place if we all did one nice thing for another human being today. It really would make the world a better place. And if you wouldn't mind doing a little extra, if you run across an animal today, try to do something nice for the animal too. Even if it's just a pat on the head, pat on the bum, throw the ball, maybe give a little treat or something. I think if we every day did one nice thing for another human being, one nice thing for another animal, it would make the world a better place for all of us. So I hope you had a good trading week. Hope you're staying safe out there. Hope you're enjoying your weekend, and I appreciate you spending the time here. And hopefully by spending the time, you are learning something valuable. If you have any questions or comments, please leave them in the comment section. I'll do my best to reply to them. But thank you so much for taking the time. And God willing, I will see you next week. And have a great rest of your weekend, everyone. Take care. And on the way out here, I have to run the U.S. legal disclaimer. Thanks a lot, everyone. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.